So the Federal Reserve System is the central bank of the United States. It's got it's an unusually decentralized central bank by world standards, and in particular we have 12 regional reserve banks, including the Federal Reserve Bank of Minneapolis, which serves as the headquarters of the 9th of the 12 districts. And that 9th district includes the state of Montana, the two Dakotas, state of Minnesota, northwestern Wisconsin, and the Upper Peninsula of Michigan. So one of the things I really like about my job as president of the Federal Reserve Bank of Minneapolis is the opportunity that I have to travel around my district. And it's not just for tourism that I'm doing that. It's the idea is to engage in what I think of as two-way communication. So one of my jobs as president of the Federal Reserve Bank of Minneapolis is to participate in Federal Open Market Committee meetings. And this is the meeting of the 12 presidents and the 7 members of the Board of Governors of the Federal Reserve System in Washington, the committee that meets 8 times a year to set the course of monetary policy. And one of my jobs as part of that meeting is to bring forward information about our local economy to the FOMC. Now, the FOMC is not going to use that information. There's no one district sets monetary policy for the country. But any kind of aggregate information is typically a little bit behind. It's not as forward-looking as the information we'll get from on the ground, talking to people on the ground, participants in the economy. And of course, there's huge heterogeneity in the economic experience in a country as vast as the United States. And North Dakota is a shining example of that. I think that things have been going very well here relative to the rest of the country over the last, especially over the last 4 or 5 years. You have a state like North Dakota, a state like Nevada, you're sort of getting the two ends of the spectrum of the economic experience of the U.S. So that's part of what I'm doing here today is to gather local intelligence. I'm going to be talking to, at 10 o'clock, I meet with community and business leaders to talk about labor market conditions here in Grand Forks. I'm looking forward to that conversation, which I think will be different from the kinds of conversations I would have about the same topic in, say, the Upper Peninsula of Michigan. At the same time, then later this afternoon, I'll be attending a meeting of local business leaders, and that's a more broad-ranging conversation just about local economic conditions, just to hear what they have to say. So I expected both of those meetings to be really in listening and learning mode more than anything else. Then at lunch, I'll be giving a talk on the economic outlook and the implications of that economic outlook for possible improvements in what we're doing in terms of monetary policy that could even make that outlook stronger than it currently is. So that's the second piece of the two-way communication, is that I come to the various locations around my district to tell people what's happening in terms of the national economy, in terms of how the Federal Reserve is interacting with that national economy. And so I view that as being also a very important part of my job, is that I think the reason the Federal Reserve System has been as successful as it has been over the past century is its ability to give people a sense of buy-in to the, in places like Grand Forks, give them a sense of buy-in to the system as a whole. And that comes from, I think, their representatives coming back and talking to them about what's going on in terms of monetary policy and how it's designed to help the national economy. So that's what I had to say by way of setup. I'm certainly happy to take any questions.
How does the North Dakota's a little bit of an island, because especially out in the western part of the state, the regional economy though, are you looking to be a little bit more positive than what it has been over the last couple of years?
So, the beginning of every year, the Minneapolis Fed prepares an outlook for the 9th district. And that outlook, I think, is a relatively positive one. It's a little stronger, certainly, in North Dakota than in the rest of the district. Overall, the 9th district has had a better experience over the course of the last 4 or 5 years than the national economy. So right now, if you look district-wide over the 4 states and the portions of Wisconsin and Michigan that I described earlier, the overall unemployment rate would be, I think, under 5.5% for that whole district. We're expecting to see continued declines in that unemployment rate over the course of 2013. Of course, the national unemployment rate remains highly elevated at 7.7%. I think what's true, though, and this has been something we're still trying to dig into and understand a little bit better, is even though I just cited the number on unemployment as being stronger here in the 9th District than around the country, when I talk to people in the 9th District about their feelings about the economy, outside of Western North Dakota, you don't get a sense of the kind of upbeat optimism that you would expect to see given those conditions. And I think part of that is because the national economy is still suffering from having such a slow recovery from the recession that we had.
Is that common? I mean, if you look back over the history books, does the opinion lag behind actual numbers?
You know, it's such an unusual time frame that I'm reluctant to draw those comparisons because, you know, the one comparison you'd be drawn to as a macroeconomist is the big recession we had in the early 80s. But the recovery time was so rapid from that compared to what we're experiencing here that it's hard to draw those comparisons. And that you know, the heterogeneity of the recovery that we're experiencing this time around, you know, so many years in, so the recovery, to give you a little more detail, the recession is usually dated as having started in December of 2007 and ended in June 2009. So we're almost 4 years into the recovery, and the national unemployment rate is still at 7.7%. That's a very slow pace of recovery. And so it's hard to answer your question about that just because I think the slow pace has really informed people's relative optimism about where we're going to be going.
You mentioned that you're kind of a little bit of a fact-finding, but at the same time, from what you know about Western North Dakota, and of course a very ag-driven state, North Dakota, is the type of growth that we've seen, is that sustainable from here on out? Do you see any
you know, you could talk to people who are going to be much more informed about this than I am. You know, predicting what's going to happen to oil prices, predicting what's going to happen to commodity prices, those are challenging exercises. So I won't try to engage in that. I do think over the longer haul, it's a human capital driven world, and what I mean by that, the way to establish sustainable growth. If you look back over the last 2 centuries, I think the way to establish a sustainable growth is by having citizens acquire skills through education. And that's going to be, I think, my own prediction for the longer haul, or the 20 to 30 year kind of time frame, is that's the way to have sustainable growth, is through that process of skills accumulation, through education. The more education we can make our citizens here in North Dakota, the 9th District, the United States, that more competitive we'll be able to be in the world economy, and I think the richer our citizens will be able to be. That's my vision of what long-term sustainable growth would look like.
I think some of the things that you might hear about when you're visiting with local people is concern about housing, available housing here, also the labor pool, which is still short, which is driving down the unemployment rates. And I think that especially here in the Grand Forks area, things maybe haven't picked up as much as they have in other parts of the state as far as the economic benefits of the oil, and they're hoping to glean some of that out this way through kind of an expansion. So I don't know if that's a natural progression. What about you know, in Minnesota? What's the crystal ball say for that?
You know, Minnesota is a more diversified economy than, or at least differently diversified than North Dakota is. So our economy tends to look a lot more like the national economy, I would say. We're not as ag and resource driven as North Dakota. So you know, our outlook for Minnesota is, you know, a continued improvement, maybe a little slower than we would like. But again, unemployment is very low in Minnesota relative to the national level. I think around 5.5% in Minnesota compared to the 7.7% we have nationally. But yeah, I think we continue seeing ongoing improvement, and it mirrors what happens at the national level because of the fact that Minnesota's economy, just the structure of it, is much more akin to what's going on at the national level.
How about South Dakota? Can you compare North Dakota's economy to South Dakota and what they might be experiencing?
You know, South Dakota, again, has relatively very low unemployment, not as low as North Dakota's, but so from that point of view, I think your economic conditions seem strong in South Dakota, but you know, definitely they have not had the kind of rapid growth in incomes that's happened in North Dakota, and it's because you know, we mentioned two sources of strength in North Dakota, resources and ag. Well, South Dakota is getting the ag benefits, obviously, but the oil is not there, and so there's not you don't get that same sort of source of strength there. But South Dakota, you know, the shock that hit the country, the macroeconomic shock that hit the country as a whole, certainly you see it in the South Dakota data. It's there in terms of what happened to unemployment and employment, but it's just not as powerful a shock, and the recovery has been, I think, more rapid as a result of that.
Do you look at, when you do your outlook, do you take into consideration the impact of oil in North Dakota on South Dakota and Minnesota? We hear so much about them trying to attract those service industries.
You know, I think the simple answer is that our model isn't as sophisticated as you're describing to have those kinds of interconnections. With that said, we have a great website that's prepared on the Bakken and the spill, really taking, I would think, a very rich look at the impact of what's going on in terms of the Bakken oil field and its impact on the district more broadly. And one of the things we were surprised to find is that the spillovers, one way to think about that is in terms of wages, that the direct impact on wages has been relatively limited outside of a relatively narrow geographical band around the oil fields themselves. So obviously, if you're in Williston, wages have gone way up. But if you get further and further out, you don't see as much of an impact. And it really, I was surprised by how quickly the gradient falls off in that regard. So, you know, if you're thinking of Minnesota's economy as really having been affected by what's going on in North Dakota as the oil fields, I think that connection is probably very limited, very limited.
Are you seeing the costs of living also dropping off once you get out of the Bakken region? Well,
you know, the data on that is not as nice as we would like, but certainly if you look at things like rents, you know, you can certainly see that also the gradient is relatively sharp. Yeah.
And also, as far as the agriculture industry goes, do you forecast impacts of continued drought?
You know, again, this is an area that people are going to be, there's others are going to be much better able to talk about this than I am. I mean, I think that the, you know, forecasting the economy is challenging enough for me. Forecasting the weather, I'm going to stay away from.
I guess my only other question would be, what are you hearing as far as interest rates locally, and what concerns the banks might have as far as getting loans on the books?
So, you know, that's a conversation I'm sure we'll have today. You know, some of the business leaders I'm sure will be talking about, will be representatives of banks, and so I'm sure they'll be able to talk about some of those concerns. You know, at a broad level, but this is even more nationally, but I'm sure these concerns are felt here at North Dakota as well, is that loan demand remains suppressed. I think the Federal Reserve's policy of we continue to buy longer-term assets as a vehicle to suppress long-term interest rates. We have announced that we intend to keep the short-term lending rate between banks, the Fed funds rate, extraordinarily low, near zero essentially, until unemployment falls below 6.5%. I think both of those policies are ways to stimulate loan demand. They're ways to stimulate the economy broadly, and that will give rise to more loan demand. So I think the Federal Reserve is doing what it can. I will suggest at lunch there are ways we could do even better on that dimension. But that's, I think, the key source of issues for the banks, I think, that we hear about, not just here in North Dakota, but more broadly, is they would like to see more loan demand. And we couldn't agree more. We'd like to see more loan demand as well. But the way they get that happening is to get more growth in the economy.
Why do they chop a little bit of Michigan off and stick it in your district?
Yeah, that's a excellent question. I don't really know the answer off the top of my head. I mean, I think there's certain resource connections that you could probably, if you go back to 1913, there were probably, when the Federal Reserve was set up, there was probably more economic similarities that were seen across these regions than maybe we see right now. But for me, I think it's an endless, the heterogeneity, the differences in my district are just an endless reminder of just in this one chunk of the country, you see such heterogeneity of what's going on in the economic experience. And I think it's a very valuable lesson for me as a policymaker to keep that in mind, that you just look at the national numbers, you just think, boy, you just keep track of the national unemployment rate, keep track of the inflation rate. And those numbers are important, but I think it's important for us to also remember there's lots of different experiences going on underneath there. And I really value that fact that I'm able to see that in our district.
So they gave you the good part.
Well, I will say that every part of my district is really beautiful, and so that's I won't try to horse race with other districts though on that.
Glad you can say that when you walk outside.
Well, I'm from Winnipeg originally, so I actually do feel a real sense of there's a real sense of austere beauty, I think, to this kind of vision. Although I do prefer, I have to admit at this stage, to look at it from this side of the window.
Yeah, there's not a lot of difference driving over the border, is there? Geographically going north.
Well, thank you very much. Appreciate your time.